Welcome back. This is Kadeen Shaw. I am your professional educator and I help novice and intermediate traders improve their technical analysis skills by teaching them how to chart high probability supply and demand zone. Let's get started. So I've already done the Dow futures. I've already walked through you guys and show you how I do my market analysis each week. This is the last week of August, technically. So this is August 28th. So I'm getting ready to do a market analysis on SPX. And if you haven't done so already, go ahead and watch the one that I did on the Dow futures so you guys can see what's going on. But I'm going to do a market analysis on SPX because we had a weekly candle that closed last week. This red candle here is the last weekly candle for August. And you can see how strong it is. I'm going to talk about it in a little bit, and then I'm going to go ahead and show you guys what my SPX chart looked like and how I use mathematics to do my charting. So now we have, again, I mentioned we have 3 more days, until the monthly candle is closed. So let me go to the monthly candle real quick so you can see for SPX. It looks similar to the Dow Jones candle because the market has been moving in the same direction. So the monthly candle is coming down. The weekly candle happened already as well, and then we're on the daily. So what I'm going to do is show you what I see on the daily, and I'm going to explain to you using some mathematics to show you guys how to chart or how I chart these zones. First of all, I've been studying XPX and see how it moves. And one thing I know about XPX travel on a daily, 1 standard deviation on average. 1 standard deviation, that's how much it moves. So for this candle right here, this candle actually was one standard deviation. XPX went. Now these 2 candles that happened, and this is last week. This candle was a half a standard deviation. This candle also was a half a standard deviation, and this candle traveled another 1 standard deviation. So on average, XPX travels, again, 1 standard deviation per day. That's a mathematical term. Now what I do is, this gray box is going to be my first containment box. So this is how I measure because I know how XPX move. I use momentum, I use volume, I use rate of change, I use trend line, and I calculate where XPX will go to each day. So what does that mean? My candle, this box is my first containment box, this gray box, and then the second box, which is the orange one, is my secondary containment box. This orange box is definitely 1 standard deviation. This yellow line here is my 0 line, and this is the 0 line for Friday's candle. Let me show you what's going on. You see how long this Friday candle is? This candle traveled more than 2 standard deviation. How do I know that? Let me show you how. It opened here, so from here, 1, 2, 3, 4 up will be 1 standard deviation to the upside. So in case price go to the upside, it can travel 1 standard deviation. And I also do 1, 2, 3, 4 to the downside. So that's another 1 standard deviation to the downside. So on Friday, price opened up here with momentum. Powell spoke and price started to drop. Price now went down here at the 1 standard deviation line, and this was about 10 o'clock, one hour into the market, 10:30, price was down here, already traveled 1 standard deviation. So that told me, you know what? Sellers are definitely in the market because this is only 1 hour into the market open and price already traveled 1 standard deviation. That's usually what it does in a day. And it did that in 1 hour. So that's how I know sellers or the bears were definitely in. So you know what did I do? Most people took bearish position down. Once price broke down my orange line, I knew that it was passing out. So when price came out of my monthly supply zone, I definitely knew that confirmation that the sellers were in. So price went, here's my 2 standard deviation line right here, this white line. Price went down all the way below. So this is about 2.5 standard deviation. This is more than it ever have. So sellers are definitely in the market. They're definitely in control because of this long candle. So until I see some confirmation, I'm going to be taking bearish positions still because sellers are definitely in control. I'm going to now take you to my chart so you can see what the zones on SPX look like. Let's take a look at SPX. This is the S&P 500. And we're going to look at this one. You see all this information on my chart. I'm going to explain why I have all these things on my charts, right? So first things first, I showed you guys on Friday. If you follow my Instagram, if you follow my TikTok, or even here on YouTube, I posted a video before price. When price was all the way up here, I posted a video. And then I also posted these 2 demand zone. And because momentum was so strong, momentum was all the way down. Momentum on Friday was down as much as -3%, which is over 1,000 points. The Dow fell 1,000 points. This is a 1,000 point drop. So with that being said, here's the gap. Price came to the gap, and I knew that price was probably going to reject because I have this downtrend line. So price came here, didn't even pass my trend line, and started coming down. Price broke through my first demand zone, which I presume I didn't want this zone. I wasn't waiting for this zone, so I'm going to delete this because I knew price was going to break through it. Sellers were too strong. Here's my second demand zone. There were some buyers here. However, I also knew price was going to break through this zone because, again, this zone was balanced. There's a lot of trading happened here. A lot of buying and selling happened here. So chances are there wasn't enough buyers still left here. Sellers came. They weren't going to come and pick the buyers up and turn back. They just came and delivered supply and then kept going. So I'm going to delete this zone too because this zone is no longer there. But I'm going to keep my support line because, again, I'm waiting for this line to turn into resistance. So because it broke through support, I'm going to see if it acts as resistant. And if it does, I'm going to be riding it down. So also I was waiting for, these are my intra zone. This is a 1 hour zone or 30-minute zones. I was going to ride, I'm planning to ride this from this zone to this other yellow zone right here. And what I'll be doing on Monday, depending on what price does, I'm going to look for a pullback to ride it from this zone to this zone. And I believe this is a 3-to-1 risk to reward ratio. Let me go ahead and take a look at it. This is a short, long. All right, for me, this is going to be a short position. So let me go ahead and measure the risk to reward from here to here. I'm going to try to enter from that position and exit from this position here. Let me go back. I don't want this. All right, so this will be my entry. I'm trying to enter right here at the white line, but I'm going to wait, or the yellow line rather. I'm going to wait till price pull back, and then I'm going to try to exit, not all the way down here. My target is going to be probably this yellow line here. And I'm going to bring this down to, so I can measure my risk to reward here. So this is a 10 points. So from here, from this yellow zone to this other yellow zone, and these are 1 hour zone, this is a 10-to-1 risk to reward. So this is a phenomenal trade. So I wouldn't even try to come down here. My target is not even down here. My target is going to be right here. You see where it says TP1, take profit? That's where I'm trying to take profit. So I'm going to move this line back up and see what's my risk to reward. And it's still giving me a 7-to-1. So this is a nice zone. So because price closed below this zone here, which is my 1 hour zone, my yellow zone, I'm again, I intraday trade. I'm a day trader. So I trade lower time frame. I trade 1 hour, 30 minutes, 15-minute zone. So again, this is a 1 hour / 30-minute zone. And price closed below it, so that means this zone is no longer valid. So instead of me deleting it, what I'm going to do now is wait for price to pull back to it. And what will that look like? I'm going to go down to a lower time frame and show you guys what it looked like when price pulled back. But before I do so, let me explain to you what's going on with these trend lines. This trend line here is acting as resistance. This trend line was acting as support, and as price broke through it, it started acting as resistance. So let me go down to my 1 hour so you can see these two yellow zones a little bit better. I'm going to go down to 1 hour. And as you can see, even on the 1 hour, you see how long these candles are? You can even see the trend lines a little bit better and how price are rejecting. Price try to come up here. And I spoke about these pin. These are the candlesticks that I like. Price came here first in the morning and test this zone. You thought it was going to be support, and it rejected back through it, right? So price and buyers try to push price back up. But with my trend line being right here, the seller stopped. It's a price rejected right here and stopped. And then from there, it started going down and it broke support, kept breaking it and kept going down. Now we have these support being broken. Now they act as resistance. So as price try to turn back around, it's rejected and keep going down. So again, I'm looking. So what am I doing on Monday or this week? This zone has closed. So I'm looking for price to come back here and retest potentially this zone right here. More than likely, probably up here will be better. So I'm going to see if price is going to try to come back and turn around, and buyers are going to try to push it up. But if this turquoise line, buyers get rejected and start pushing it down, and I'm going to see a wick, I'm going to love this zone right here. I'm going to show you what it looked like. So I'm going to go back down on the 5 minutes. When I watch it, I'm going to watch the 5 minutes. What am I looking for wick-wise? You see this pin right here? This is a pin, but this pin is formed This was a demand zone that's now turned into a supply zone for me. So once the zone has been broken and closed below, it turns again. Once support has been broken, it potentially turns into resistance. Once resistance has been broken, it turns into support. The same thing for supply and demand zone. Once the supply zone has been broken, it can potentially turn into a demand zone. And once the demand zone has been broken, it potentially turn into a supply zone. So because this demand zone now is broken, it now is going to be, I'm going to look at this as a supply zone. So I'm going to change the color from green because there's no longer any buyers here. All the sellers came out and take out all the buyers. So it's no longer a demand zone for me. I'm going to make this a supply zone now. So I'm going to color this in red. So now my goal is I'm looking to take it from this red, which is my demand zone, my supply zone now. And I'm going to take it to the line I told you I'm going to take it to. And I like this nice pin. Again, I like this pin. I told you guys, this is when I'm looking to trade, this is the candlestick formation I look for. These long wicks that are forming the supply zone or the demand zone. So this inverted pin right here that's formed, I like this. It's telling me that sellers are trying to push price even lower. So what I'm going to do, I'm going to wait for it to pull back about 50% of this line, and then I'm going to take it down to the downside. And what is that going to look like? And let me go back to the 1 hour so you guys can see it. Actually, let me go back to the daily. And this is what my two zones that I'm looking at. So on Monday, or not even Monday, just whenever these zones are ready, my next one that I'm looking for, we already know this is 7 to 1, risk to reward. I'm looking to take a trade from this. I'm going to short from this zone to this yellow line. That's more than my trade. And again, if you want to see how this works, if you want to see more technical analysis, if you want me to teach you how to chart these zones, if you want to teach you how to identify a strong supply and demand zone, the ones that are high probability that will now turn price, the ones that you know that price is not going to blow through them, make sure you go ahead and click the link in the bio, the one that says book a consultation, book a course, schedule a call with me, and I will walk you through exactly how I chart these zones, how I identify these zones so you guys can understand how to take only high probability setups and then just wait for it. Other than that, again, this is XPX. Let me go to the VIX real quick and show you guys what the VIX look like. Before I get to the VIX, I wanted to point out one other thing on SPX real quick. So as I mentioned, I'm waiting to do this zone right here on an intraday trade. So I'm going to drive this from this supply zone, yellow supply zone, until this yellow demand zone. These two are 1 hour zones, 1 hour / 30-minute zone. Initially, now if I'm doing a swing trade, and I may swing it depending on how long it takes, but if I'm going to do a swing trade, I'm going to watch this zone, which is this turquoise zone, and see how price reacts to this zone. If price comes here and turn around and I see nice confirmation, I'm going to take it back to the upside. However, there's a potential, again, that I mentioned, price may pass through this zone because this zone is also balanced. So there may be enough selling pressure that sellers will pick up all these buyers and just keep going. So the zone I'm waiting on that's going to be perfect will be this bottom zone here, which is going to be this daily demand zone. And the reason why I'm waiting for this zone, or I like this zone the best, because again, what do I say? This is in a triple zone. I have a weekly, daily, and a monthly zone. So again, those triple zones are typically nice. So what I'm going to do is look and see price come down into this triple zone and watch my candlestick formation that I'm looking for with a nice pin. And I look for other formation as well, you know, whether it's, I look for engulfing candles, I look for Haramni, I look for morning stars and evening stars, I look for shooting stars. But I like pins. I just like just pins. Whatever pin that I have, hammers, anything, I like pin. Pin has been just so phenomenal for me. As you can see here, look at this one. Here was a pin. This pin was formed here. This is a kind of a hammer. And what do I mean by a pin? It's like a head with like a long wick to the bottom or the top side, depending on where it's formed. When this pin was formed, what happened? Since this pin formed, price left and price has been gone. And that's why I like pins. And finally, let me show you real quick momentum. I use momentum as well to assist me with my trading. So if I'm looking on here, these two yellow lines are going to be my overlines and underlines. And this is my middle line, which is the zero line. Whenever momentum crosses down my zero line, it means momentum is negative. When momentum crosses up the zero line, that means momentum is positive. So in this case, because momentum has officially crossed down my zero line, I know we're in negative momentum. Now let me show you what the VIX look like real quick. And the VIX has a lot going on. The VIX now has crossed up my zero line and the